we will begin with our third session. Hope you had an amazing and delightful lunch. So our third session is focused on ESG reporting and its seamless integration into business strategies for sustainable growth. Whether it's choosing the right framework like GRI, SASB or TCFD, or embedding the ESG considering into the daily operations. This session will be packed with actionable insights. Leading this session discussion, we have Mr. Adil Meron, who is Senior ESG Consultant at Credible. Let's dive in it. Adil, over to you.
Yeah. Hi everyone. Good afternoon. Hope the lunch was nice and this session is going to be a little bit heavy on reporting. And post I'll be showing little bit more interactive slides, right? So we'll be taking a lot of cues from the audience as well. So try to stay awake for the whole session. Yeah. So starting off, I'm Adil. I have close to more than 5 years of experience within ESG domain. I come from a mechanical engineering background. I have a master's again in energy engineering. So mostly related to energy auditing, energy conservation, RE projects, those kind of areas. After that, I delved into the whole ESG reporting piece, right? So coming to ESG reporting, I am quite familiar. Most of the people sitting here are quite familiar with the one kind of report at least, that is either GRI or BRSR. You would have anyway heard these two terms in some part of your job profile, some part here and there, any of the new, whatever is coming up, you would be able to see these two words, BRSR or GRI, right? So to understand So basically to understand how all it started, right? What triggered the whole process of ESG reporting, we might want to go back till 1960s, 1970s, where this was essentially more a CSR perspective, which still exists to date, corporate social responsibility. So companies began noticing there has been a sustainable shift happening. Companies wanted to start becoming more sustainable. They wanted to put out their initiative that has been done. A lot of controversies also have happened with examples like Ben and Jerry's, right? Again, Quakers is another good example where they laid very basic groundwork and they advocated against investments in certain areas like tobacco, alcohol and weapons, which they deemed to have a negative impact on the society. Right, so this slowly started happening, which this all slowly started, and this is how the whole process of ESG reporting started originating. That's another great read if you guys want to follow up on, is Silent Spring by Rachel Carson, which talks about the environmental aspect, the degradation, the problem that human causes to the environment as such. And finally, Brundtland report gives out the whole concept of sustainable development, which we right now know, which is a basic of any sustainable class you go. It will start with Brundtland reports, statements, right? So this is the origin story of the whole ESG reporting, and how did it rise to everybody's ears, right? So in 1992, Rio Earth Summit highlighted the importance of sustainability reporting. 1997. GRI comes into perspective, which we all know as mother of reporting. Every single reporting framework after that is like a derivative of the initial GRI. And GRI has also come a long way from what it started out in 1997 with inclusions of sector-specific standards, inclusion of more and more material topics each year, focusing more on materiality assessment. And hopefully, I think within 1 or 2 years, the whole double materiality also might come into the GRI perspective. Right now, it's just a materiality assessment. So moving ahead, then a lot of investors started seeing the scope of it, right? How a company is affected in the terms of 3 pillars, the E, the S and the G, and how a company makes its environmental decision, its social decisions, and the governance and its transparency, right? So moving ahead, again, other reporting standards like UNPRI, which is still there in 2006. So up to now, right, up to the latest ones which are there, which is IFRS S1 and S2, which is replacement of your old TCFD. So like that, more and more standards have been coming up, more and more people have been, invested in reporting, more and more companies have become more transparent in using these ESG reporting standards. Right, and what is the current condition, right? What is it right now? There are 3 areas that I would like to focus on: is the mainstream adoption, the regulatory momentum that is happening, and finally, the investor and stakeholder demand. Basically, mainstream adoption is every company's have taken that into their strategies, their business goals to report on these, key focus areas they have been identifying over the few years. They want to report their sustainability initiatives over the 3 pillars of ESG. So all this has caused, that is happening, and this ESG reporting as such is getting mainstreamly adopted by most of the companies around here. Very good example is the BRSR in India, where it's mandatory to report, and again there are many others who report it on a voluntary basis, right? Then regulatory momentum is, again, BRSR is a best example of a regulatory momentum. CSRD is another example of a regulatory momentum. So governments have seen this, bodies like the COP, all these bodies have been seeing this, and they have been pushing out for mandatory requirement for companies, and especially in the hard to abate sector. That can be again seen in case of CBAM, where it focuses on certain materials that are exported to Europe, right? So those areas, they have seen key, this is more polluting than the other material that is coming to it, and how green can they make their land, right? So that's the whole concept between the cross-border carbon border adjustment mechanism. And finally, the stakeholder and investor demand. So everybody, we talk about green investing, green bonds, everything. It has a finance angle to it, the whole greenifying your projects, right? So this also has caused companies to put out reports so that these people can pick up the report, which is there in the public domain, can analyze it, can understand how the company is moving forward in terms of ESG as well, not just on the finance aspect. So these are the current scenarios that we are right now in. Right, why this is again gaining more and more traction. And next point, I want to speak about a few frameworks which are mostly common, which most of you guys know a little more in depth, right? So coming ahead, I just want to show a timeline on how all this happened. So starting with GRI, then CDP, UNPRI, and SASB. CDP is again not just a reporting mechanism, it's also a rating mechanism, just to give out a point. And these are the older ones, and with the current ones coming up, like TCFD, again, not so new now, because again it got disbanded by 2003, but still most companies still use it to a certain extent until they completely transform themselves into the ISSB, which is the IFRS standard, right? And EU standard in 2021 again CSRD, and 2021 again BRSR. So these are the most common names that we hear. There are much more coming into play. There are certain, Australian government has its own reporting standard. So other countries also has their own BRSRs. It's the easiest word, right? But still, these are the most common ones that we have. And what Indian companies right now, because they might be having operations in Europe, they might be, there might be a listed company in the top 250 bracket, which comes under BRSR. So all those things comes into play. So moving ahead with, certain specific frameworks like GRI, as I told, the mother of all frameworks. This started the whole race of, the reporting process. More than 10,000 plus organization adopted, more than 90 plus countries covered under its reporting piece, right? 73, it's estimated that 73% of world's top 250 companies cover GRI in their reports. And what is the best thing about this is this can be adopted into any of the other frameworks, because every other framework seems to be like a derivative of the GRI. So if you pick up any report, right, which is CSRD, let it be SASB, let it be BRSR, right, there is always linkage to a GRI indicator. So every company, it's very easy to move into the GRI space as well, because again, it's voluntary. They do have certain strict guidelines which you have to follow, but again the overall aspect is voluntary, so the company gets to choose what to report on. So company also has little more freeway compared to BRSR, which is very strict. It has its own questionnaire and you have to stick with the questions, right? You don't have the option to eliminate or add it in unless it's a leadership indicator. Well, then it's not mandatory for you. So, right. So GRI goes like that. So there are around 34 sector specific standards out there. It's linked to UN SDG. So if you link GRI with your BRSR, automatically your BRSR gets linked to that corresponding SDGs as well. So the whole linking between frameworks is completely possible if you pick up on the GRI reporting aspect. It's again basically divided into standards like 1, 2, 3. Then you have your economic standards in 200 series, then 300 series followed by environment, then 400 series followed by social. Lot of topics have been, developed, after a lot of stakeholder consultation for each of this topic. There has been increase in topics over the years. There has been changes in topics, like, for example, earlier water and waste used to be in one category. Now water is a separate category, waste is a separate category. Then waste again went through another separation. So a lot of changes keeps happening within GRI. It's getting updated. That's why even though it's launched in 1997, the oldest framework, after that TCFD also came into place. So even though it's that old, it's still a major player even in today's market. So that's why GRI has been given that much amount of importance throughout the years, and still companies do report on the GRI. Any companies BRSR report, you take the annual report, there would be one last page of GRI, index there. Right, moving ahead with TCFD, this was one of the revolutionary, reporting framework that was developed. This focused mostly on the financial disclosure aspect, which relates to climate change. Right. So, what were the focus areas while developing TCFD was on the governance area, strategy, risk management, and lastly metrics and targets. So, basically, how do you link performance of your company on the climate change, its risk, to your financial disclosure? So this firstly was brought out by TCFD. Sadly, on April 2023, in 2023, this is discontinued. This is not now outrightly there. This got transformed to something called as IFRS S1 and S2, which you guys are learning now in greater depth, because that is going to be the next big thing, is what is being claimed. Right. So again, this was widely adopted, almost same power as GRI, almost same figures as GRI, but not as widely, because mostly companies, this is mostly related on the finance bit, and most of the finance organization have definitely done this whole TCFD report. You can see these reports, even Indian companies, almost major players have done a TCFD report along any of the years they are in this play, right? And this was even mandatory in certain countries like New Zealand, Japan, etc. And 90% of world's largest financial institutions have a part coverage in TCFD. Also, so when you talk about value, they handled about 194 trillion in global assets under AUM. So that's the amount of coverage TCFD had before it got discontinued. Still, even though it's discontinued, the standard still exists, even though it's not clearly valid, but still people continue doing this because they find this still credible way of reporting their ESG disclosure. How transparent it was, how you might say how easy it was also. So that's why TCFD still plays a role, but again it got replaced by something better called IFRS. So IFRS is International Financial Reporting Standards, very similar to TCFD, right? Its focus areas, again, rather than just focusing on the climate related financial disclosures, it goes more into integrating with other frameworks also. So SASB, TCFD and CDP, you might see a very similar trend. This is trying to overtake GRI, right? So people, being the latest addition to the whole reporting family, people have started looking this into greater greater depth. People have slowly started to make their reports on the basis of IFRS, completely abandoning TCFD, right? So this is being happening, and this is estimated to have, they are estimating a 90% of the companies will be start to do IFRS now, right? Slowly shift their focus from GRI as well, because this is more updated compared to the other GRI. A major change from GRI to again IFRS is on the double materiality implication in IFRS compared to the GRI, which is again little bit older. They don't compare the financial impact each material topic makes, right? So that's not covered in GRI as of now. So that's why if GRI doesn't update itself in the coming years, easily IFRS will overtake it, because it is more relevant. It's more relevant to financial institution, even as a depth measure for companies to analyze, right? For financial investors to analyze, IFRS provides much better indicators compared to GRI, unless GRI goes through an updation and comes with the whole financial impact thing. So that's the whole change from TCFD to IFRS. And lastly, CSRD, just want to cover because we will be going in BRSR in a very great depth. It's very similar. I know, like, have anybody in this have ever touched upon CSRD, like reporting wise? Anybody raise of show of hands? Nobody. So CSRD is essentially very similar to BRSR. It's Europe's BRSR essentially, but it covers a lot more depth than what BRSR does for us. Slowly, maybe in the future, BRSR might be as well as good as the CSRD reporting standards, right? Again, here also there is focus on double materiality, the whole play of double materiality. The first time I'm seeing an Indian company do a double materiality is only because of the force that is applied on them by the CSRD rules. So you can see how even European reporting standards play a major role in shaping India's ESG reporting frameworks and standards. So slowly companies who have some, relation with a European company and who are mandated to do their CSRD reporting have done the double materiality. And what happens in usually Indian market is when one person does it, the other person also wants to follow. Very common trend that we see in the Indian market. And that is seen, and many companies, even though they are not mandated to do the CSRD reporting or do the double materiality itself, has started picking up on the whole double materiality piece. They have started, to develop, to understand each topic, how does it, affect them in a financial sense as well, not just on the stakeholders' viewpoint, right? So this is another thing, and other things, right, like the normal indicators does go into a lot of depth compared to BRSR, like policies and everything, but mostly you can say it remains the same. So anybody who is doing CSRD can definitely do a BRSR report, and anybody who does the BRSR report will struggle with the CSRD report, but they can, make do with it. They can understand the KPIs and do it, except for the double materiality part, which is the whole huge difference between these two. Right, so this was again a very latest standard, 2021 established, still not mandatory. It's going to be mandatory from this year. It was earlier stated to be mandatory from last year, but they pushed the timelines from 1 year. So it's going to be coming up from this year, hopefully, unless they postpone it again. Right, so this is what's happening, and they are slow. It's done in a phased manner. It's not like similar to BRSR, right? Where first we had the 150, then the 250, then the 500,000 going like that. So it's the same thing. They also have the same line of operation. First they are doing the top companies, then they will be moving on to the smaller and smaller MSMEs in the coming days. Right. So that's what's happening on the CSR debate in Europe. What's happening? A lot of objections has been raised. A lot of people are doing it. So many things. Again, similar to BRSR. Again, here also there's an implication of assurance, but it's mandatory for a CSRD. So unlike BRSR, where it's mandatory from certain people and not another people, but whoever is included within the scope of CSRD are supposed to do an assurance as well. So just by that, I'm going to the directly diving into the Indian overview, what's happening in India with the whole ESG reporting piece, right? So as you know, SEBI has initially started this called BRR, right? Then they slowly started to transcend to something called BRSR, which is Business Responsibility and Sustainability Report. Show of hands who have done this. Yeah, a lot of people, right? Yes. So basically, most of you might be well aware of the rules and regulations, and every 6 months a new update comes, right? Latest update being on value chain partners, right? On December 24th, value chain partners, just before Christmas, right? So they gave a new addendum. I think it was a good Christmas gift for most companies because they lowered the standard values, right? They lowered the standard requirements. They made it to be mandatory from next year. So a lot of bonus for companies who were like really panicking on how to do it for the current year. But yes, as I say, within Credible as we work, most of our companies that we work with are doing their value chain piece, even though the values are lowered. They still want to try it out before actually going into the mandatory phase. It's always better to, start early and adopt it early. And you can see the same thing in the whole reporting piece as well. Many companies, right? If you see the whole report, how many companies have submitted, it's not within the limits that's prescribed by SEBI. Many companies have gone ahead and done this thing on a completely voluntary basis because they know that at some point of time they will be affected. Also, it's seen that because of the whole thing, value chain piece, smaller companies, right? Smaller MSMEs also have started coming up with their own BRSR report, not maybe a full coverage of the report, but at least on the core indicator. This will be more covered on the next session by Harshida, my colleague, who's going to be taking on value chain piece specifically, right? But yeah, so this is what happening, and then the whole key drivers, right? SEBI's mandate, investor pressure, and the government policies. So government wants us to be decarbonized by the year 2070. So we have a 2070 goal, right? So we have that, and all this pressure comes directly to the companies whose major on our P6. We have the whole piece on emissions, and companies have to become decarbonized by 2070. They have to do their GHG inventory by now. They need to have the short-term goals by 2030, 2035, 2050 at least. Shift to the new technologies, and 2070 hopefully like the CCUs or the whatever technologies we are going to see in the next 7 years, maybe green hydrogen or whatever is going to mature. Right. So this emphasis, and you can see, right, the government also supporting a lot, right, on the green hydrogen, especially on the green hydrogen mobility, right, on the renewable energy projects. So a lot of support is also there. Then on the investor pressure part, companies both, right, on investor pressure, also on consumers. Consumers also right now within the last global consumer survey of any big four you can take, you can see more than half of the people are willing to pay the premium if the product is more sustainable, more green. So it's seen that companies are, the people who are buying it is also now okay with to pay that higher price for a better, more sustainable product that promises to protect the environment, do better for the society, etc. So that is one other pressure. So you need to have that product in market. Then next thing is on the investor side, you can see, right, all banks now do a whole green rating system. Before giving all the credit lines are associated directly to ESG indicators of any company. So when you make something public, right, you have to be very, very careful, because an analyst sitting at any of this bank can easily point out errors and deem you like either unethical, or you're not being transparent, you have made a mistake, so why would we trust you, right? So that's the whole problem. So that's investor pressure that is put on companies to do these reports. Moving ahead, like what is BRSR, right? So going a little bit fast here, right? So basically this reporting standard was made on 2021, right? Changing the whole BRR, which was business responsibility report, to include the word sustainability, right? And what it all encompasses, like companies has to start reporting, mandatory for top 1,000 companies by 2022-2023, and it focuses on 9 principles. So how the report is divided, 3 sessions, A, B, and C. A covering your general information, little bit on the company's employees, your material topics comes there, right? Then your B is your management disclosure, how policies are aligned, right, to the 9 principles, right? The NGRBCs, the National Guidelines for Responsible Business Conduct, laid out by India. Right, so how it's being aligned to these 9 principles, and then coming to later like statement of your director, main points that you want to speak with your stakeholder from a management perspective. And then lastly, the session C, which is your 9 different principles as per NGRBC, starting from the ethics viewpoint all the way up to last marketing labeling is what I call it, but it's not just that. There's a lot of questions like IT coverage, everything comes into play, but I call it marketing and labeling because it's almost derived from GRI's marketing and labeling, right? And then there's a P6, P5, P5 is P3, the major ones that into play. P3, your employees, right? How a company looks after its employees, all the questions related to that. P5 includes all your human rights, right? Questions related to human rights, which saw a lot of changes this year, especially in terms of POSH being covered, your value chain, what is the coverage on value chain. So a lot of change has happened in the human rights portion. Then finally P6, which is your whole environmental piece, and which I find most companies struggle with, because a lot of questions are here and there, right? Starting from energy, then you have emissions, you have energy, water, emissions, and then finally waste, right? Emissions, I have seen companies struggle with the most is not even scope 1 and 2 and 3. It's mostly on the air emission part, where I think most companies gets it wrong because they put a small unit called mu-m or milligram per Newton meter cube, which denotes a instance in a point and not the total kgs of emission that the company actually did, which is outrightly, first of all, wrong. But yeah, most companies do it, and a lot of restatements for that specific thing you can see in the new generation reports that is being out right now. Then also SEBI has included the power purchasing parity like last year. So now you can compare it to any of the companies operating outside for a better peer benchmarking rather than just sticking with our own intensities. Lot of pressure on assurance also was there initially. Now, even though it has been little bit changed, assurance was there, but little bit it have got changed. Then the current, that was the second last update, right? Second last update came up with BRSR core, right? So core came into play where it outlined 9 different KPIs or metrics, and within that there are again sub KPIs, right? So all this came into play with the new latest changes, and these are going to be audited, right, by an external assurer, and that's how your report is said to be a standard report or an assured or audited report, which holds true to the values that is being reported. So a sense of credibility SEBI wanted to bring into the report, and that was the step taken. So that's the thing. And last update, definitely the value chain piece, right? Lowering it to 2% of your whole value chain, then not being mandatory for the current year. So certain leeways here and there. Still, one thing I personally haven't seen is like, how will the value chain partner, or once you get the value chain assessment, how will you report it into the report? No framework has come, nobody, like only what we have is from the old BRSR report, like how to report it, right? What if you have like 1,000 of values, and how would you report 1,000 pages of it, right? You cannot go ahead and do that. So what is the recommended style of reporting? One more good update had come, right, on the industry standards. So SEBI had associated itself with FCCI, I think another one, 2-3, ASSOCHAM is there, right? So they have been associating with the major industrial associations to come up with ways to understand the KPIs. That was a very good report, especially helping value chain partners, actually, like MSMEs, to understand what is scope 1, scope 2, at least, right? How to calculate that, how an intensity has to be calculated, what are the emission factors to be considered, at least the basic ones, like the fuel ones, the electricity, where to get the latest emission factor for electricity, right? So all those things have been very well laid out in the industry standards, right? So that's a good update that it was come. It came as like a sub update to the earlier 18th to 24th January report, but yeah, a good report to actually understand what to report on each KPIs, because the guidelines that was earlier set is around 2021 when it was launched, and they never updated any of their guidelines until right now in 2024 December. They just gave a little more comprehensive review on each of the KPI and what to do with each of those, right? So what does BRSR, the whole business case metrics of BRSR principle, and how does it add value to a business, right? So you have 9 different principles, as I told, and how does it have direct impact, right? So for example, let's take environment, right? So access to capital is a direct value addition that happens, right? Because you will be pledging on your company is moving into a more environmental focused way. You are going to invest in certain renewable energy products rather than, procurement rather than sticking with the old fossil fuel based projects. So there is a future in that, right? There is something called, like, you are moving to a fuel switch, right? So there is a future in that, and companies, the banks or the financial institutions are more willing to invest in certain elements like that, rather than to stick with people who are conventionally doing it, who are not having any difference in their emission, or who have increased their emission or their emission intensities in the next years and coming years, right? So that's a good example of that. And how does human capital, in the third case, is companies who have been reporting their employee attributes or employee KPIs have seen to be having better, longer retention rates of employees, rather than the people who are being completely blinded, or who are not reporting, or there is no access to knowing any of the value addition that is done to an employee. So this is a survey that was done, I think PwC, Deloitte hai one of them, and you can see this result. It's very well written on the employees focus, or also who are applying for jobs, right? Earlier it was like, you get a job, you want a job, you get a job, that's it. Now people have been looking into, like, what does the company do? How does it help me? Is the company growing in a sustainable future? So people are getting concerned with it, and a very large number have been started concerning with it. So that's how, very short way to explain like how each small, transparent reporting helps, creating different values for the business, right? So just want to showcase that. Then finally, ESG is not just about the reporting. What are the advantages that the company also gets, right? That's the whole point, right? To do the reporting, what the company benefits. One is definitely the financial gain because of lower, investing in greener products. Initially, even though the capital costs are high, but most companies report on a better turnover period over the longer duration years. They don't have they have a reputational gain. First of all, they will adhere to all the regulatory compliances that is set upon them, and second, they can easily tell if any objection, any cases is raised against them. They have ample enough proof to counter those things. So that is counter investor activism. And finally, attracting talent, as I told. Better social, they have a huge niche of better adopting, all the employees are better retaining in the whole job chain, and people who are looking for jobs are also more interested in the companies who are more sustainable, who are more transparent in their reporting needs. And finally, operational gain is again, when you want to bring down emission, or when you are improving the skills of an employees, right, automatically you will start getting gains. Most every company who have done a certain change or done a decarbonization project, or have started with certain initiatives, have definitely have been seeing improvements in their operations. And this widely again is reported in the BRSR, in P6 leadership indicator, and also in the essential indicator question being, how do you reduce your GHG gas emission, which provides you a great area to write essays on how each of your activity has cost how much of your reduction. Also another area where cost, how much cost has been saved, or again question is on how much capex investment has been done. This is on principle 2, and what were the environmental and social impact that particular project cost. So these all things, when you write down itself, you will understand that this much operational gain was made. When you talk to the relevant stakeholders who are dealing with this, you will understand the company has made significant operational gains, and also with operational gains comes financial gains as well. Right. So how a BRSR reporting is done on a step-by-step basis. Understanding BRSR, like first of all, we try to understand what are the new changes that have happened, what is the new rules that has been come up. We'll try to understand each of the KPI, how to report on the KPI. Then we do a gap analysis on what we have versus what we don't have. We try to fill in the gaps where the indicator is an essential indicator. We try to do the leadership indicator as best as possible, but most of the times all companies, mostly the problem is mostly will not be applicable to everyone, since BRSR is made for a common generic reporting purpose and not for a specific sector purpose, like how you have for GRI. For example, oil and gas has its own specific set of factors which is applicable to them only. So like that, BRSR plays a more generic view, so there would be definitely gaps, and companies would start to fill in the gaps as much as possible. And finally, it's to integrate BRSR into the business policy. This includes initiating programs, so you understand the gaps that is present, you understand what are the different opportunities that is there, and you start implementing those, whether it can be as small as a policy change to address a gap, it can be a full-fledged renewable energy project to address the gap, right? So you bring in programs, you bring in initiatives which is required to make your reporting better and better, to enhance the quality of your report. So that's what integrating BRSR into the business policy. And finally, it's all about drafting, reviewing, finalizing the report, where many companies go wrong at that point, where there is a lot of data management happens. You need to compile your entire group's data, or multiple plants data to a single point, and you need to report on that. And you need to, with auditor lens being given more and more importance in the coming years, you need to report it on, you need to provide the adequate evidences as well, right? And finally, it's about the continuous monitoring of all the remaining gaps, how to fill in the gaps for the coming years, what targets to take for the next 5 years, 10 years down the line, and addressing those. So that's the whole reporting process, just to lay out. Most of you have done this whole exercise. So what are the different challenges that is there? ESG reporting, essentially we'll talk about the BRSR angle, right? What are the challenges and what are the opportunities, right? So if you see, the basic challenge is on the lack of data. Very good example is scope 3, right? People will not be having enough ample data, or if there is a data there, it would be on the fragmented basis, right? It won't have a specific value that you are looking for. It might be in a different value, then you need to bring it together. The teams, right? Lack of data can also cause, because the team is also scattered. You need to not just focus on one team. It's not just the activity of a safety team to deliver the value. You need the HR to be involved, you need the accounts to be involved, you need the whole operation wings to be involved, you need IT, you need legal, right? So everybody has to come together. So that causes a lot of problem. That causes a lot of problem with data management as well, right? And finally, again, on the value chain pieces, right, there's a limited awareness problem. This is what SEBI is trying to address with its latest industry standards, to bring in more awareness, to make people understand how to calculate, what are the guidelines that is required. So all that, these possesses a challenge, especially when a company is trying to do a VCP, value chain assessment, etc. And finally, what are the opportunities? So right now we have a lot of tech going around in this space, how you can easily integrate all the data, how you can collect the data, how you can report it in a better way, how you can collect evidences, how you can audit the data before even going for a publication, how you can enhance your answers. So all these things have been there on technology integration, how a scope 3 data can be pulled, right? Scope 3 purchase goods and services. Whoever have calculated purchase goods and services, okay, so people who have done that understands how many millions of rows they have to estimate, right? How easy it would be if you can just link two codes together and just get the value out, which is currently possible, which is there in the market right now, right? So those are kind of huge steps or huge changes the whole the ESG reporting angle has taken. A lot of AI, a lot of tech is being involved in the reporting process to make as low mistakes as possible, right? There is a lot of capacity building happening for MSMEs, which includes again industry standards. A lot of people guiding, and many guidelines being present. Companies are trying to even hold classes for their suppliers, and this makes their suppliers also aware. They also start reporting, right? So this is like a chain that's happening, and that's the whole opportunity that is there. And global alignment like ISSB, which if comes into play, right? IFRS is definitely a very good standard which encompasses everything, including BRSR reporting ka jo, whatever metrics is there, whatever KPIs is there, it circles around everything. So that's another thing that's going to come up, which is an opportunity that is there. And now we'll just go for an interactive section, like what goes wrong in a BRSR report, right? Can you tell, like, we'll start with this. Oh, that's not visible. Okay. Can you tell me what's went wrong? These are all published reports. Mostly are like very large company. I'm not taking names, but very, very large company. You won't believe if I reveal like who it is. These are small, not very big. I'll go to the big companies next. You cannot see? Yeah, sorry. Yeah. Hope it's visible, this one. We are talking about. Yeah, it's fine. I think readable hai. It's quite readable, or it's not at all readable? Okay. I'm standing close so I can read. Yeah, like I just want this to be. Yes. No, it will not. Yeah. What went wrong? This is the waste question, how a company disposes its waste, right, through different methods. It's a huge error, it's not even a small error. Oh. Okay, this was the easy one, but still, you can see, right? No. No. It's not. See, it's the same value. Yes, which is a huge error, right? It's a addition mistake, as simple. Like if I give this problem to a 5th standard, 6th standard child, he can do this, right? But this is a listed company making an error on a very large report. Copy paster. Basically, it's a copy paster.
2024 category of waste is not matching, I think.
That is what you studied.
Yeah. So this addition should have come somewhere around 3000 instead of 700. A control C, control V hai. This is because data is not flowing correctly, right? You are using a word, right? You would have done perfectly in your XBRL file, and when you did it in Word, you did a control C, control V. That's why it happened.
Basic issue is many people what they do is when they're putting the data, they manually do it. Right? In
Correct.
Excel, everything should be based on
Yeah.
formula.
Excel, it's
so that people
it's a
can check
formula.
back also. That is
Correct.
the basic issue.
But when you come into Word, this problem exists, right? Because it's not flowing into directly into your report, you are copy pasting manually. What is wrong with this? It's pretty easy. You can't see it. Okay, it's
It is more than 100%.
no, that's different. That is another error, but I don't know whether it's true or not. No companies will have same for 40/40, but I don't know whether it's an error until I speak with the person and whether it's actually the same. They might claim it's the same. So no proof of checking right now. But what was the error? Yeah. So the problem here is question C and question C is same. They messed up the whole framework. Right, same company, both. Right, and there are hundreds of other mistakes there. This was the most funny ones, right? That you shouldn't make. So again, this is again problem because you are exporting it into again Word, right? And you made the mistake. Next one is a bit complex. No, you need the both of them. Yeah. Got it easily. Now you guys are becoming auditors, so start. This is how an auditor looks into your reports, this lens. What happened? So this is 2 years report. Okay, this is same company, 2 years report. What happened? Yeah, somebody died. What happened to that person in the next year is nobody knows. So if somebody compares to 2 reports, right? Any financial institution compares 2 reports, this is a discrepancy between 2 reports. This can, like, if it goes for a rating or something, this will be like a huge problem. And then the management will be like, where did we go wrong? Because nobody will check 2 years report. They will be like, this year's report correct. But then they will not understand what happened in the back end. So this is another classic error where companies forget to put in. Correct. That is also there. So right now I have seen people do this, right? Like, but usually people give a restatement in below or a note if it is there. That is, if it's a good report. If the person is very clear, then they will give a good, clear understanding. So this is one. We can move to the next slide. Yeah, okay. Like last one more. I mean, this is 3 more. But again, I'm just gonna explain. So you can. This is a major company in India, not even small, financial company. Not going to give you more details. Yeah, it's a financial company. I mean, not directly related to finance, but not banking, but finance. Yeah, you can. I think it's okay. What? Okay, you need both of them. Okay, just minimize it. It's okay. It's just a small thing. Yeah, just go. I'll just explain. They have waste, but they don't know what happened to the waste. One thing. Second, they have water consumption, but they don't know where the water came from. Right. This is just 2. There are again hundreds in the report. Major corporation, but I didn't want to, just do. So this is errors, right? This is basically might be a lack of understanding of the KPIs. This is not a copy paste error or a framework error or anything. This is basically happening because the person might not be capable enough to understand what should have been the value. So this is where you need like a consultant lens or somebody to actually know, or proper capacity building opportunity here.
Our industry operating and generating and disposing waste doesn't know how much waste is there.
Correct.
It's completely not available.
Correct. Yeah, this cannot happen. This is absolutely wrong. Low questions here. And water though, anyway, it's like that. One more is there here.
You can-
Yeah, okay. Okay, oh yeah, sorry. Next is, so these are all errors, right? Next is like, what are improvements, right? What is that AI angle, or how a human really can make an answer much, much better than it has to be addressed. So you can see this was the answer of one of the reports. This is not a major company, this was a very small company, but a good report, right? So this answer is, yes, the differently abled employees are working. So this is a P3 question. This is a standard answer. You will see this answer everywhere, right? So what is different from your report from any other report I pick up? This is the most standard answer you can see. But good reports, or how it can be improved, is like this, right? I knew, right? I read the report and I came up with the answer. So they had 5 different differently abled employees present in the company. Why not highlight that into your answer, which makes any analyst who reads it give you a better score, right? So that's how small, means you have already reported something, why not carry it over? Why not tell a story in a much better way? You would be having, this is a major manufacturing company. So they will have this, right? All the RAMs provision is there in most of the building codes right now. It's mandatory, right? So these are things. Same company, there was one mistake which I saw. They have female employees but no maternity benefit, which is not allowed in India as per standards. But yeah, so these are publicly available reports. And this I did maybe in an hour's time. I just went through like 5 different company, I went through screener, I typed, I got it. So this is this easy to find mistakes. Then imagine a person sitting with full resources as an analyst in a financial institution, finding your mistake and giving you a score and rating you bad among the other good reports. There are very good, excellent reports out there as well. So this is the competition that you guys have, right? So there's the whole people who are reporting is most beautiful way, and then there are people like this. So this is how you need to stand apart. This is just an example of standing apart. Nothing wrong in the answer or anything like that, except for the maternity benefit part. So like, just to have like, how does Credible help? Credible as a platform, we help to bring in all your data together. That's the first thing. We help you guys to get a better auditor lens, right? We help companies to ensure that your data flows into a single point. It comes from credible sources, right? It has a maker checker function. It has proper evidence backing up it. So an auditor comes to you and tells you ki 100 kilowatt hour, what did you get? And in the month of September, you just pull up September attached hoga. So you can directly show it to the auditor. So it's going to be that as easy while using Credible. We do support a lot of reporting framework, including the old TCFD, SASB, GRI, PRSR, definitely, right? And also the value chain part piece as well, which again, my colleague will be showing you. So basically this is how it happens, and there is a lot of auditor lens as well. So your reports are pre-audited. You are able to download the whole framework itself after filling. You are able to assign it to people who are responsible, be it from any department, right? And that whole downloading process itself will help you, because it's not a Word document you are working with. Essentially consider it as a Excel document which comes out as a beautiful Word document, right? So you don't have to copy paste or anything. You can just give it to your designers who might change it to make this, to make the changes, but mostly it remains the whole report is coming as a Excel but as a Word. So imagine it like that. And so that's how we support companies to help with their whole reporting need, as also their whole ESG data management problem. Yeah, so I'll just show a quick demo on how all this comes together in the platform. So this is basically our whole home page is what we call it, and you can see all the just a demo account. So you can see around 165 facilities. You can call it plants, you can call it offices or anything. So data is all tracked within a facility, right, on different indicators. For like, just to show an example on emission part, right? So you have all your emission, you can set it up, you can change the units, almost any unit that exists, right? We recently had a problem where it's about, do you guys support MMBTU? Because European companies, we support everything that is available on the planet, right? Whatever is there in the market, it's there. SI units, we have a direct link. So we have that, and we also have a huge number of databases, more than thousands and thousands of emission factors almost everything imaginable from EIO, XEO base, DEFRA, Indian transport factors, which sadly did not get developed over the years. So all these things are covered. We also have process emission parts where we tackle tough chemical equations, right? Chemical processes that happen in the whole industry, like clinker production in cement industry. So all this is also we are able to track. We also have a very good system for scope 3 as well, which includes the whole problem of purchase goods and services, how easily it can be mapped. Right, so we do have that as well. We have business travel, another use case where you only need to give to and fro destination and what is the mode of transport, and automatically picks up the distance and everything from, the API is working behind it. So all this is there. And scope 2, again, we have automation of, you can put in say an electricity bill sitting in Delhi office for a small plant working out of Chennai, and as long as the consumer number is mapped, it automatically tracks, it automatically extracts the total units which is present in your bill, which is not really useful to you, but it also multiplies it with 0.716 last year's value, and gives you the emission factor as well. Sorry, the emissions as well. And this is just the bring, and finally all this data comes together, right? You are able to see visual dashboards, which is more suited to your sustainability reporting needs as well as your sustainability communication needs. It can be as simple as a direct thing, or you can even it's not coming. What happened? So it can be as simple as that, or this is something that we are still in, developing. So you can see as like which scope 3, which part is higher, right? It can again go in depth as much as like which, who is that contractor that you have who is contributing to the highest. You can again divide it into sectors. You can find which material is causing you the highest emission, who is supplying you that particular material out of alternative option, because the company will have alternative contractors, and then you will be able to see which contractor gives you more, who should you switch, right? So it goes up to that kind of depth. With this you can see, right, air travel, everything, it goes to that depth, so you can understand whether your air travel was more, should you cut down on air travel, should you be more focused on taking remote based rather than asking person to transfer. You might have to consider a lot of things. You have to consider whether it was a success meeting, small meeting. So companies are able to determine these things by knowing their emissions as well, right? So we have similar for water, energy and everything. And coming to the main piece of reporting, PRSR report, just take an example. So it's as simple as also we provide the, like, if your company have already reported, like years of reports are there, automatically you can import your XBRL file, and automatically previous year it will be done just like that for all quantitative questions. Sorry, yeah, for all quantitative questions. This is already. To an existing report. Just go to an existing report. I don't know what's happening with the demo account, but yeah, so basically it's divided like how you see in a normal Excel, which we currently use, right, before importing it into a Word document, right? You have all your things listed. I'll go to some more interesting ones like P6. So here, if you want, so you have seen how we collect data, right? Electricity data, everything is collected. So you don't have to make a double entry as well. You have the option of either loading the data, or for existing questions, if data has been collected, you can view the facility data as well. Also, you have an option of autofilling. So autofilling, what happens is, if you collect the data once, automatically the data will come into the play. So for all the indicators, for everything, it will come. You can also see an approve, reject, right? So that's the workflow. So if I assign it to somebody, automatically they have the capability to push in the value, and the manager can approve and reject. This will help in actually creating all the workflows around for each KPI who should be responsible, that kind of check. Right. Also, the option is there for adding any documents. Also, we are coming up with little more advanced things like adding in comments. So how you do it in Word. So what's problem with Excel is the problem with comments. The comments may not be as good as the comments in Word, which is more interactive in terms of comments. So we have added that functionality. So we are using an Excel, but imagine that having the whole capability of Word, where you can do the comments, you can assign that comment to a certain person, because maybe 2 or 3 people will be responsible for a single indicator. So that's another case. And once it's done, it's like a direct export, right? So you don't have to figure out anything after, you do the sign off. So I saw now approve, reject ho gaya, so your sign off happens. So this happens in usually Excel. Then you give it to somebody for Word, and that's where the whole problem starts. So no problem, you always get sent into the, whole beautified way. This is definitely a plain template, but you get the idea. So all the data will be filled, and you don't have to do any more copy pasting in your Word document. So this is done. This is it. Unless you want to add some comments, which also we have added as a new functionality, where it's not allowed in BRSR. You are not supposed to add footnotes in BRSR directly, because XBRL file will not contain those footnotes unless you add it in remarks as like column by column. But you don't want that. You want it to be under every table, wherever you have problem, right? So that you can add it as a comment, and automatically in the Word document that will come. And in the XBRL, it will automatically go to the where the comment portion is supposed to be, which is like a long list of remarks which is there. So this essentially happens, and this makes your life easier. You don't have to copy, paste to and fro and make mistakes, right? So just wanted to show this, and yeah, that's, you can switch. Yeah. Oh, you want, okay, I can.
Say suppose if you follow, you can show
Yeah.
node framework, let's say.
GRI, I want to see, like, this, as it's a demo account, I think if it's not activated, yeah, it's activated. I can show you GRIs. Yeah, so GRI, as I told, right, you have the mandatory things, then you have your environmental, social, and governance. Governance is essentially your economic factors, not governance per se, but most of the governance topics also comes there as well. So that's one portion, and you have the GRI. GRI will be your GRI 1, 2, and 3, which is your fundamentals, right, then your main topics, and then your materiality assessment. So that's the 3 portion which is covered under this. So for example, if I go to environmental, energy, taking energy because I'm an energy engineer. Yeah, so it's basically, again, here also you have the capability, it's not enabled, but you also have the capability to pull in the information if already fuel consumption has been recorded. So you don't have to go and search, come back, report, control C, control V, no, we eliminate that whole need, right? Automatically everything gets populated.
I was curious on the final outcome in terms of report.
Okay, it won't be a final designed report. That's what you're meaning. It won't be a final design report. So this report is basically a skeleton that you can give it to your designer, who comes up with all those illustrated patterns and stuff like that. So we cannot have a final, you cannot never publish this report directly. But what we can say is this report's all data, everything will be backed up. Evidence will be linked to it, right? This will be having a double check at least before going into a designer's hand, right? So that's what we can give you, a properly laid out skeleton of the report. So I can just go back.
Including all the descriptions that are required to be given at every stage.
Yes.
Various descriptive aspects are to be covered.
Correct. So for every, for also informing people, right, whether what to do in certain areas, like guides, right, again, that is also covered. I'll just show you one of them again. So this, again, we have reworked a bit. This is, I think, old OGA. So right now what we have done, even for value chain pieces, right, we have developed, this is old, right, this is not new. You can see, these are guides, but for value chain piece, it's more interactive. If you select on certain things, it will come. Also, it will be as per the current industry standards, right? So people know how to calculate a small, if we have given examples, make people understand how to, do that small, maybe, scope 1 and 2 calculation, or what is the surface water, what is the groundwater, right? As, how to consider that. So all those things have been given. Also, that guide is more interactive. We are trying to make that happen in here as well, so that only the question that comes will get these things. We have already done the segregation based on questions. If you see, I for this one only will cover energy, but it's a very long document. But yeah, so this small bit of help here and there is also provided. Right. This is more we are trying to develop for the value chain piece, because I understand as a company you guys might have more idea, but a small MSME who you are, just giving the value chain assessment piece and asking them to answer on what is your scope 1 and 2 is like totally hard and totally unjust on them. So we are trying to develop on that areas as well, and it's already developed, it's there right now. So yeah, this is the thing. Also just wanted to show. So this is how a GRI will look like, right? So it will be a skeleton report basically, which will cover everything. Now after this, it's all about you guys, right? We also have a consulting wing where we also help companies to arrange and design on how it should look like. But this is more covering all your KPIs, whatever is required, whichever area is required, like should you consider material, should you consider energy, should you discard biodiversity, which might not be applicable to you. So it gives you a construct of whatever is applicable and the values that is there. Now after this, it's all about sustainability communication. Yeah.
What about the graphics and all?
Yeah, that's what. We don't design graphics as such, because we are not a design company. We give it to third party, definitely, right? As per our clients, whoever they want to select, who has been doing this. But for the communication
but
purpose,
in your dashboard we were seeing, right?
Yeah.
So there were
That can be
those
given.
graphs would be still there.
Yes,
in
yes.
these reports.
In this report, it won't be there. This will be basically plain.
So how the designer would be extracting, or they will have to develop the graphs based on
No,
these data?
so this is one document. We are able to map that along with this. So we can actually add in graphs wherever we want. It's not a problem. We
It
can
come
do it.
here, right?
Yeah, it can come here. Also, companies, another option is companies can actually download the whole dump, right? Just control A, pivot kar do, then you can view your entire data according to any segregation you want, if the designer wants, or what specifically the chief of sustainability wants, right? Exactly that point can be brought up. And also we also help them, right? We cannot just give them and leave. We'll also help them develop the answers and how to frame, where should the message of the director go, where should it come. So that is also there. This is just a layout of the whole thing on how the data, what is the correct data. Basically this is the correct data that you will be getting. Yes.
Around data integrity, how do you make sure that can you help with assurance piece? Do you help with preserving the data integrity piece? How is
Yes,
that? Yeah.
yes, we do that. So we call it data quality checks, right? So what happens is if somebody, for example, a diesel bill is uploaded and somebody uploads a electricity bill, right? Automatically that is captured. That is one way, right? The AI triggers it. So we have an AI working in the background. It triggers key, this is an electricity bill. It understands it's an electricity bill, right? And triggers key, this user have attached a diesel bill instead of, electricity bill instead of a diesel bill. That is one thing. Second, we check on variance for month on month, right? Any breach on variance get directly triggered to the managers or the person who enters, right? Depending on how it has flowed up, right? So each data point by point we are able to monitor, and we are able to back up evidences on the basis of that. So that evidences you can, so once it's corrected, right? So he disregards the whole electricity bill, and he attaches the diesel bill and he uploads it, and once the value is found to be correct, it goes into the system, right? It gets approved into the system, it gets logged. At that point, that data is deemed to be correct, and that data is can be pulled at any point of time by an auditor. So that is also there. Also, we are developing something called an auditor tool, which helps an auditor audit the file. So basically he has to just speak to the system, like how you speak to ChatGPT, for example, right? You have to just speak, what is this company's electricity bill for this particular month, what is the backed up evidences, give me segregations, do that meter has a calibration certificate attached to it. So these questions he can ask and he will be getting. So it makes the life of an auditor very, very easy, because I've been personally an auditor to many audits as well. So that makes the life of an auditor very, very, very easy to get the information directly from the system and to verify it, right? He can see it and verify. Along with that, AI also will prompt key this is correct or this has a variance breach to the auditor as well. So we are developing both sides, right, for the customer as well as the auditor side as well.
So essentially, you have an OCR technology at the back
It-
end, which
it's
sort
not-
of take the data out, and you are putting that in your log, and you are sort of also saving the documents for the auditor from a traceability perspective.
Correct.
Is that what is happening?
Yes. It's not just OCR because OCR is like very simple.
Very
It's more
simple.
advanced version of an
OCR.
Yeah.
Some version of OCR
Yeah.
with okay.
Correct.
Okay, thank you.
Yes.
EMS, both are measurable,
Hmm.
right? We have parameters through which we measure the, we can
Quantitative
monitor the
metrics.
performance. Yeah, it's a quantitative measurement. How about the governance part?
Governance part in reporting.
Yes.
So right now we help with companies to develop the report. So basically, as I showed, right, what can be improved session. So it was a even though it was a social question, it was a qualitative question, right? So instead of giving that answer, we either use AI to develop the answers. So that's one thing. Second, we have a human, a lens over it. We help companies as a consulting team. We also help companies to develop on their answers based on the reports or whatever information that has been provided. The AI is also capable enough to give you the values for that. So that's something.
My question was, like say, under governance portion, we are supposed to design many policies.
Yes.
Right?
Yes.
So, what is the level of maturity of those policies? So this is a kind of the gap assessment as well as the improvisation in the governance part.
Got
So
it.
was this kind of services
We-
provided by?
We give policy drafting separately. Like we help companies to draft policies as per the current requirement or what is the current global industry best standards. Right. We help companies to mirror map, find gap analysis within the policies as a consulting service. But it's not something that is directly related to the platform. Right. We don't have a platform service directly for that. We do have areas where you can upload the policies and you can benchmark kind of that, but you cannot have the human angle in that unless somebody comes in and verifies and checks your policies. So policy drafting is done by the company but not through a platform.
So in short, to answer to your
Yeah.
question, the gaps in policy, it cannot bring out.
Gaps in policy, directly it is not able to do it, but we are able to do peer benchmarking within the platform. That's another use case that we have.
So then the area of improvement within that policy should be
Correct.
able to come
We have
out.
not extended it till policy drafting. That's what I told. There's need. The AI is able to do it, right? But still, right now, a human has to intervene in between. But for quantitative metrics, as ma'am, we can do peer benchmarking and everything. Yeah, qualitative is something we are working on. It's yeah. Correct. It has to be the top board, so it is there. So companies has to come up with new ways to even do that. Like we are also trying to as much as possible on the qualitative front also, right? How to give out better answers, how to handle different policies. For example, a policy drafting exercise, first thing is to compare multiple policies, right? So you compare multiple policies and come out with what is the best thing that is out there, how they have translated that policies into procedures, right? So these things backed by an AI, right, to check instead of a human reading through like pages and pages and pages. This is something that we are developing, but it's not still in play right now. We do have a whole benchmarking piece where you can benchmark different quantitative figures. Qualitative initiatives can be benchmarked, but as making a change in something like a policy, which is very critical. So those things are not right now outrightly available.
One more
Yeah.
question out here. So now let's say if there are certain areas where a company's ESG rating needs to be improved.
Yeah,
Based on the report,
correct.
it's some X rating is there. Now it has to go somewhere else. So there are certain incremental approaches which company takes.
Yeah,
So there would be not much of a difference.
got it.
So in case if there are out of the box suggestions which need to come in terms of strategies to be built in, so So does that also come out from your
right now? So direct answer, no sir, we don't directly do, but we are right now, like as of now, we are working with one company to do their improvement on EcoVadis, which is one of the rating systems, right? So what we are trying to do is trying to find and analyze different levers which we can teach the AI, right? These are the certain levers which help you improve your score, and finally we have to see whether the improvement happened, because we have still not submitted the whole piece to EcoVadis yet. But once it's done, we should be able to understand, as you told, right, what are the kind of levers a company can take, strategies that can be improved or developed, which can improve the score. Right now, as again I told, the peer benchmarking tool exists ever for certain questions, right? Certain questions, certain initiatives, like again, to Disability Act. How many companies have done it? How they have reported it? What is this? Why is this answer better than the other? Is there right now, but not on a scoring basis, right? What so you are asking is on a scoring basis, if you can understand whether if you do this, will you get a better score than the other?
yeah,
Right.
EcoVadis, it could still be simpler because there are fixed set of questions.
Correct. Correct.
And accordingly, what is expectation, that is also described.
Yeah.
And you have to build in those expectations. That's one part.
Correct.
But when it comes to the sustainability report and the improvement of ratings based on those sustainability reportings that you do, in that case, certainly outside in purview, outside in views, whatever are happening in the external world might be that organization might not be aware of, and those suggestions, those inputs based on the other data, whatever you have from the others, various other reports, or whatever reports are publicly available. Yeah, taking those into account and then trying to identify what are the solution themes. One. Second is the comparative analysis on individual points.
Got it. So sir, we do that, right? But not a rating system or not. We don't score it, right? But we do have that capability of understanding between different initiatives. So it's still on. I'll just show a brief glance of it. Yeah.
Lunch session, there were like nuclear reactors are there at homes. Yeah, so those developments are there.
Yes.
So as such, in the larger part of the world, this might not be known, but then the suggestion coming from, yes, there is something which is information which is available, and it's for the organization to choose from it if they can.
Got it. Yeah. So that's what. So we do that. This is just an example case. We can develop it accordingly, like whatever information you want to pull out, you can pull out. Just to show an example. So this is just a comparison between different companies, right? Hospitals we have taken, and one Max Health is our standard company, and we are trying to see what are the different competitors doing, right? Yes, exactly as you told, right? So here you can see AI insights. So this right now is what I told, which is in development. So this side, once you understand on, as ma'am told, just to build on ma'am's answer. So here the qualitative analysis do not exist as of now, right? This is on the basis of quantitative, mostly on the quantitative basis, what is the change in trends, and what are the initiatives also covered. So we do have certain things called like this. So you can see, right, for different companies, what are the initiatives. So like this, we are able to pull out any information you want, but not in a structured way right now, because never have been the ask. That's one thing. Second, this thing, we cannot do a scoring as of now, right? To understand, as you told, like why are they better? What is the improvement that I'll get if I do that? Right, so those two things are not right covered, but you can see it's a very basic native thing that we have started building on. Mostly like in the coming months and all, because we are deep diving into the whole AI part in the whole tool. So we might come out with certain scoring mechanisms or something like that the coming days. Yeah. So you can see, right, different we have divided. This is completely done by AI. We just tell them what all reports to pick up, which it will pick up from the XBRL, whatever is there in BRSR right now, and automatically it will load the data and it will try to understand for the keywords, and it will start understanding what to put. So this is done totally automated. Nobody's writing it or copy pasting it. It's completely done. You can load as many reports as you want for a particular sector. For iron and steel, if Tata Steel is in my company, I can load all the iron and steel companies in India and do the same thing, and you will get it. Yes, these are the suggestions you're getting. you can see like wherever it's applicable, it's there. But yeah, depending on the BRSR report and everything. So in the coming days, as BRSR report improves, this also will start improving. Like companies start answering better and better, this also will start getting better and better. It will be slowly able to understand what to do and what the company should actually do. So that is also happening on the site. So yeah. Right now we are trying, BRSR is more structured one, right? GRI is not that structured as BRSR because you have seen the report, it comes in a BR. Yeah. So, no, it's there. CSRD also, yes. So right now we are testing it. This is not this is again demo account. This is something we are testing out in the BRSR domain right now because it's easy for us to test out because we know the KPIs and everything. CSRD we have not started doing this because CSRD again reports are there, but not all like the amount of BRSR that is being generated is far higher than the CSRD report that is out there right now. Maybe by this year this will change because CSRD will become mandatory and every company will be subjected to do it. But right now we are testing it out with BRSR. Yeah. So yeah, thank you all for listening and yeah, hope you had like a nice session on this. Thank you.
Thank you, Adil, for the insightful session and solving us with ESG. So we are having a networking tea and coffee break for 15